Oof, Jesus. What a week, huh? Bitcoin is back down under $20,000. And it looks like $307 million worth of liquidations happened, with 91.93% of them being longs. And of course, as everybody probably knows by now, it has a lot to do with Silvergate stock falling on Thursday after the bank announced a voluntary wind down, as this article by Yahoo Finance says. It says Silvergate Capital or SI stock fell by 41% in the open of Thursday's trading day after the bank announced that it would wind down operations and liquidate its bank. Silvergate announced its voluntary liquidation and wind down of its business late Wednesday afternoon. Silvergate was used as a liquidity provider for most of the biggest exchanges in the space, and it was a way for them to get in and out of fiat currency. But it looks like that door has closed, and it's going to be a lot harder for exchanges to be able to cash out or to deal with fiat. Of course, this is pretty negative for the markets. As this article by CNBC says, crypto bank Signature slides on Friday amid troubles at Silicon Valley bank Silvergate. Signature Bank shares have dropped as much as 32% on Friday and were at one point halted amid a sell-off in bank stocks that continued for a second day. Signature, one of the main banks in the crypto industry, ended the day down 22%. So back in October, when FTX collapsed, that had a contagion effect and it took this long for Silvergate to fall, and now it's continuing and we're seeing Signature have some issues as well. But I still don't think that this is enough to put more panic into the market than what happened with the FTX collapse back in October. And as I was saying in some of my previous videos, I thought that it was probably really healthy for us to come down and retest this 200-day moving average and turn it into support before we could actually go back to the upside some more. As you can see, which you might actually not be able to see, but let me change the color of this. But as you can now see, by this white line that is right on top of this green line that I've had drawn on this chart for a long time, this is the 200-day moving average, and we have pretty much come down and exactly touched it, and it seems like we might have some support here. Also, we do have this bullish divergence indicated by this blue line right here on the RSI and on the price, with a higher low for the price and a lower low here on the RSI, and the RSI is in the oversold territory. Coincidentally, this also is exactly where the 0.618 Fibonacci line is, and I think we're at a pretty good level for a bounce, because while everybody is thinking that this was a bull trap and that we're going down to $10,000 or for another lower low now, I think we've finally shaken some of the degens out of the market, and we can probably start to go back to the upside, as institutional investors are probably taking advantage of this opportunity and scooping up lots of bags off of the retail investors that are capitulating right now. When we saw this bearish divergence here off of the RSI indicated by this orange line, I did take a little bit of profits from my trading account, and then I bought a little bit more yesterday when everybody was panicking. So I'm just getting ready for this next leg up, and I think we might finally be in a market again where it's a good idea to start buying the dips. Today we also got the non-farm payrolls, which came in higher than expected at 311,000. And you would think that this would be good for the market, because if people are able to get jobs, then that means that the economy is doing well. But this also means that the Fed has some more work to do, and they might have to continue to tighten. However, as you can see here, the unemployment rate also did rise to 3.6%, which was higher than the 3.4% forecast, and obviously higher than the 3.4% previous from last month. This is still pretty historically low for the unemployment rate, but as it does start to tick back up here and banks start to collapse, I think we're getting closer to where the Fed is going to have to pivot, because as everybody says, they're just going to continue hiking until they break something, and we're finally starting to see that. I asked our AI overlords over here what was the Fed's ideal unemployment rate, and it says that the Federal Reserve generally considers an unemployment rate in the range of 4 to 5% to be consistent with its goals of price stability and maximum employment. And I know 3.6 is obviously not in that range, and it's not above 4%, but we are starting to get there. And I think that once we start to get there, then as they have said, as in many of the meetings in the past, their interest rate hikes do work with long and variable lags. So as it starts to tick up over 4%, then that means that we're probably headed over 5%. And hopefully the Fed will have to slow down or possibly even pivot and get ready for the lagging data, because we are probably going to be seeing the economy collapsing here. As a matter of fact, it's probably already collapsing, it just hasn't showed up in the data. Another small thing that I think could have possibly been sending us down for a little bit more selling pressure was this article by CoinDesk that says Biden's budget plan would close the crypto tax loss harvesting loophole. This means that it would probably be changed to where you can't just sell your crypto and then buy it right back the same day and call it a loss. You'll actually have to wait 30 days before you can buy back in and then harvest those tax losses when you file with the IRS. That's the way it is in traditional markets, but I don't really think that this is what's causing us sell pressure because people have been talking about this happening for a long time and it's pretty much been expected. It was just a matter of time until it actually happened. Also, not to worry because as this article by the Daily Hodl says, the future of Bitcoin and crypto will be determined by Congress and not the Biden administration, says House GOP leader. I would agree with that, and while Biden could definitely put some fear into the market, it is definitely ultimately up to Congress to make laws, and I think they are the ones that are going to have to actually figure out what to do and how to legislate and regulate cryptocurrency in the end. For now, though, we do have all kinds of agencies and obviously the administration scrambling to try to enforce power over the crypto markets, but innovation in this space is happening so fast that there's no way they're ever going to be able to keep up anyway. In summary, basically, I think that all of this FUD is just blown out of proportion, and I'm really not too worried about it because, as I said, this was a really healthy pullback, and it's also pretty average for us to have about a 20% retracement whenever things are looking bullish like they have been over the past couple months. And as you can see, this dip that we've had so far was pretty much exactly 20%. So in my opinion, all of this is really bullish, and I think that it just had to shake out a little bit of people out of the market that were too bullish, and we're probably getting ready for a bounce here. The question is, are we actually going to make a higher high here? And can we finally confirm a breakout above $25,000? Let me know what you guys think in the comments. Are we ready for a bounce, and are we going to make a higher high? Or are we actually going to be rejected and come back down for a lower low? Either way, thank you guys so much for watching. I hope you have a wonderful day, and I'll see you guys next time. Bye.